Good afternoon, everyone. Today's date is 2014. What we have here is called the VXN Nasdaq 100 Volatility Index. I'm going to draw a couple of lines so that our traders around the world is that we hit, and this fear indicator that I'm talking about is related to what? The Nasdaq 100. This is a Nasdaq 100 volatility index. It's tied to the Nasdaq 100. When we put in a top here at resistance and we had a 2-day reversal in the Nasdaq 100, stocks had put in their bottoms. Why? Because for the first time in a long time, we have gotten that fear indicator up here on the daily chart. Now, I can go back to different time periods, but we have been in an extremely bull run. And in the very first phases of this new year, we can take where we just came up and hit over here that 2013. And we also peaked right up here in this last area of the NASDAQ 100. So that's a double top. This is a little bit lower high than that one there. When the VXN goes down, stocks go down. So short-term bottoms that we talk about for the month of February are certainly in play right now. Now, having said that, I'm also going to show you the VIX Volatility Index, the fear indicator. I'm going to draw a trend line right here. When stocks were breaking out, the S&P was in its pullback phase. And for 3 days, for 2 big days, we have fallen. That meant that people were buying and stepping in to buy the bull market because that's what they were doing. We will be monitoring this very carefully throughout the rest of February because, listen, that's the first time, and markets were very overdue for a pullback. So here you can see the volatility index for the VIX, and right over here is the NASDAQ 100 where your high beta stocks trade. Here you go. You can see both of them in here clearly. One, okay, this is related to the S&P, and it's come straight down. That means that people were, what? Buying stocks on the dip. It also means that when people are not fearful, they find themselves buying equities, period. And one thing about market bottoms and or market tops is that the fear indicators are a gauge along with many other opportunities. The month of February is completely oversold in the market. For 3 days, markets went up and the fear indicators went down. They peaked. Then day 1, day 2, you had a big move down in both of them. So here's the ultimate support level above all the moving averages on the volatility index. You can see where that fear was in the month of January. And then you can see it consolidated and another round of fear had coming in. That's on the NASDAQ 100 Volatility Index. You know what looks almost familiar is that the S&P 500 has a similar pattern, and people were buying dips in the S&P 500 quality stocks. Right now, the month of February has clearly started out with a short-term oversold market. I will say one thing, though, very clearly, that the volatility in the different components and sectors and whatnot are going to increase. So at times there will not be fear, and at times there's going to be a lot of fear. So one thing about it is the reason why you wanted to buy is because February started out and all the indexes very oversold because they did. And I will be updating the S&P because this one here is your NASDAQ 100, you know. And we've come down here, and if it goes lower, then stocks go higher. Over here, in this piece of the high here, and we go down lower, then the S&P is going to go up. We'll be monitoring the fear indicators intraday in a 60-minute format so that we know where people stand. And we will know that the market had a pullback, was long overdue for it. And this is how 2014 is going to be. One thing, it's going to give the bull a great chance. It's going to give the bear a great chance. So you better get your bull and bear hats on if you know what you're doing relative to prices.